Markets are all over the place. Let me show you a few things that I'm looking at that are going to be key to determine which direction these things want to go this week. What's going on, everybody? My name's Tony with Real Life Trading. Real Life Trading has been around for over 10 years, helping thousands and thousands of people trade and navigate these markets successfully. Check out the first link down below in the description for free online courses to teach everything that you need to know about day trading, swing trading, investing, trading the markets, etc. Let's dive into these charts. Man, it has been a wild few weeks with massive gap downs on Mondays. The following weeks just end up being crazy, crazy bullish. And then it's rinsed and repeated that cycle twice now, and it's setting up again. Well, I believe we are kind of starting to work our way into this little pennant, squeezing between these two trend lines here, this black upline there, and then this key bear trend line here for the bears. So now you can see my wording on this guy here. This is what I'm watching this week. If this bear trend line here, this green line right there, decides to get broken to the bull side and close strongly above it on a daily time frame, I'm going to start looking very, very bullish. This is going to open the door to 615, 620 maybe this week. It should be extremely bullish, especially with the bears committing so hard off of this line back on Friday. I am leaning a lot more bearish this week more than anything, but that doesn't mean that we can't at least come back up and retest this trend line, and we'll see if this wants to fall back down. Now, we did end up gapping down to start the day out on Sunday yesterday, and we've been getting bought back up extremely hard. So either this is just a nice little retest, it's going to rotate back over and start to drop, and then again, we're going to come retest this key bull level sitting right through here, my face out of the way so you can see it. This is going to come into the table here if these bears decide to start to step in this week, and then I would expect us to hold and to bounce from here. Our weekly expected move is 594, and there are some pretty large options coming into play here around this area, mainly at 590. So 590 is going to be a huge put wall that bulls are going to try very, very hard to hold. We'll see if it even gets down there or not. So now if we're looking at the options for the bull side, our large call strikes are sitting at 605. We're going to be watching that one again. That's going to give us a pretty good idea of how strong these bulls are, because they should get rejected off of 605 to 606 area. If they make it through that, I would expect 610 to get hit pretty quickly. This could be very, very bullish if the bears fail to hold that trend line. And so I'm connecting those two highs there, and we're going to wait and see if these bears are going to defend this area that they should and push us back down, or if the bulls are going to come out, finally break out of this pennant and start seeing some strong, strong bull moves over the next month or two here on SPY. So that's what I am looking at. It's just going to be the battle of key areas this week, and expect it to get a little bit choppy. We've also got a ton of inflation news coming out. We've got tariffs being dropped. We've got all kinds of wildness coming through. So if you are getting frustrated on all this news, you're not alone. But at the exact same time, realize the markets are always correct. You're the one that's wrong. So don't get frustrated on the market should be doing this. No, the markets are going to do what they're going to do. Your job is to try to find that momentum, identify areas to watch to get an eye on where that momentum could be coming in, and then play that momentum with the best of your ability and manage your risk. Right now, the best way to play these crazy news markets are with options. Options allow me to manage my risk so much easier because I can simply do an absolute zero setup. We teach this method and this risk strategy in our All Access Pass with our All Access Pass members. You can try out a 7-day free trial. Go check out these courses completely for free for 7 days and learn all about it, and then cancel from there if that's what you want to do. But this style of trading is so effective during the news because you can only lose whatever you spend on the options. So if I spend $200 on calls, the worst thing that can happen is $200 is the loss. I don't need to worry about a stop. I can let the markets do whatever they're going to do, stay in the trade, and see if it's going to play out and work. Now, the downside of this is your wins are not going to be quite as large because your size is not that much. So that's a downside right there. But also, you need to be really careful that you are risking the amount that you are okay to lose. This doesn't work if you want to risk $200 and then you spend $2,000 on puts. That is not this strategy, right? So you want to make sure that you are actually putting the size on that you want to lose, etc. Again, I teach you how to do that in the All Access Pass in one of our courses. The All Access Pass has over 30 hours of trading courses from options, day trading, strategies, mindset, emotional control, and also helping you to overcome those stumbling blocks. So if you're struggling with emotional control, moving your stop too quick, being scared of losing, how to make back losses, all of that fun stuff. If you're struggling with those things, we have courses to teach you how to do that and how to become a successful, consistently profitable trader. That's what the All Access Pass is. Anyways, off the soapbox, back to the market here. I trade this a lot with options so that I can sit back a little bit more and just let the volatility play out and let the overall momentum play out. So that's the best way to navigate these markets, in my opinion. So that's what I am currently doing right now. And we're just going to sit back and we're going to see which way these things want to go. Again, it's just all about identifying these key areas so then we can get momentum. Everything else in between here is going to be really hard to read momentum on. Unless you're zooming in onto a shorter time frame, you can catch some quick little moves in and out. But until we start breaking outside of this green trend line or below this black trend line down here, it's going to be very hard to read momentum because it has been all over the place and it's probably going to continue at this. Let's take a look over at the Qs real fast. So the Qs have worked their way up into our short area last week and it got rejected hard. So we're gapping back up again. It's pushing its way back up into this large area again. 530 is a huge call wall, meaning lots and lots of calls sitting there. The markets are going to do their best to try to hold it back underneath that. And then at 515 is a large put wall. So if this thing drops, I'd be looking at this 50 EMA here on a daily around 518 all the way down to 515 for a key bull level where the bulls should step in. Again, it's probably going to have a lot more chop behind it. And if we clean up this chart just a little bit, you'll notice, I mean, it's just been going sideways for really since the start of December. It has just really gone nowhere. It hasn't been the best trading for momentum. Whether or not we get ready to break bullish or bearish, who knows? I'm leaning a little bit more on the side that the Qs need to make a new all-time high because they failed to when SPY made a new all-time high. So the Qs very likely going to make a new all-time high at some point here. I don't know when that will be. Maybe we go a lot lower first. But once that all-time high comes in, I'll be watching price action very closely around 535 to 540 and seeing if the bulls close strong up there. Because if they put in some type of reversal like this back that we did previously, this thing could be getting ready to drop pretty hard. All right, one last little ticker here is Tesla. Tesla is just getting whooped. But if you look at a larger time frame, it makes a lot of sense. This thing ran up 200% in a matter of like 5 months. So this is just retesting and recorrecting. It's likely pretty close to a bounce, I would have to say. I'm going to be watching probably like the 320 level, 315 level pretty closely here on Tesla. This is a really good spot for bulls to step in. Will we get that low? I doubt it. But that is a fantastic level if it does. So keep an eye out for that. Put some alerts out on your chart and look for bull sentiment to come in around that area. It could go lower. It might not get there, but that is a spot that I know a lot of bulls are waiting on. That's a spot that I'm waiting on. It looks in that area. Another thing that I'll be looking at for here on a weekly chart is this weekly 20 EMA sitting around 350. That's a nice round number. And it's also around the 100 EMA as well for the daily chart there at 340, 350 area. So it's coming in there. We've got an open gap sitting right, let's see here, at 347, 348 area as well. So that's going to be a pretty big spot for this week. Watch for the 350 to 342 area here on Tesla because odds are bulls are going to start stepping in here short term on this guy and it's going to start to play out. So does it have lower to go? I think yes, especially with this gap down right now. We're going to see how this plays out, but most likely bearish, and then we'll see if we start putting in some lower wicks this week and then get any follow through the following week to see if these bulls want to start to play. But this is going to be a great buy the dip. We just need to be patient because it's left a lot of people in the dust and there's going to be a lot of buy orders sitting through here. And so again, coming back into a pretty strong support, not seeing any bulls yet. Let's see if we start getting some lower wicks into this key area. If that starts to break, then that's going to start opening the door to that 3 area. And I bet you will start seeing lower wicks and buying pressure coming in around 320 to 300. And then that should be getting very close to a bottom side on this, but I am very bullish on Tesla. It's just a matter of coming into a better area to buy that can get a little bit better risk reward and play this game all over again, take it back up above 520, 530 and rock and roll again. So there you have it. There's another weekly review. Thank you for hanging out with me. We do these videos every single week to help you be a little bit more successful, learn a little bit more, and achieve the financial goals that you are after in trading.